How many Airbnbs do I actually need to pay no income taxes? One of the biggest benefits of investing in short-term rentals like Airbnbs is that you can use tax strategies to offset taxes on your W-2 income. And this is true even if investing is just a side hustle. What a lot of investors and even CPAs don't know that for a short-term rental investor, you don't need to be a real estate professional to use rental losses against W-2 income. In fact, you just need to meet material participation hours. How do you meet these hours? Well, there are 3 different ways and you only need to meet one of them. The first way to meet it is you earn at least 500 hours working on your Airbnbs. And if you're married, you can actually combine your hours together with your spouse's hours to meet this requirement. But let's say you don't have the ability to meet 500 hours. Another way you can earn material participation hours is that you have at least 100 hours working on your short-term rentals and no one else has more time than you. So let's say your cleaning crew spent 80 hours and you spent 100 hours, you would have met material participation hours. Now, the third way to meet it is if you have more hours on your short-term rentals than everybody else combined. So an example would be the cleaning crew spends 20 hours, the gardener has 10 hours, and the total of all those people is 30 hours. So if you have more than 30 hours, then you also would have met material participation. And again, in this scenario, you don't have any minimum number of hours, you just have to have more than everybody else combined. So let's take a step back. Why is material participation hours important? Well, if you meet one of those 3 requirements, then you can strategically create tax losses using things like tax write-offs or paying your kids and depreciation and bonus depreciation and a lot of other things to create a tax loss and be able to use those losses to actually offset taxes from your W-2 income. So how many short-term rentals do I actually have to have in order to meet material participation hours? Well, the answer is 1. Here's an example. We have a client who works a full-time W-2 job, and for many years, he paid a lot in taxes because, let's face it, there's not a lot of tax write-offs against W-2 income. When he later decided to get into real estate investing, his first project was going to be a house hack. So he purchased a duplex with $20,000 down. He lived in one of the units, and the second unit, he rented it out as a short-term rental. Because he wanted to maximize his profit, and since he lived next door, naturally, he self-managed the property. So he spent his time staging the property, getting it furnished, and all of the guest interactions himself, and even from time to time he would do the cleaning. Doing all of this not only helped him to maximize his profit, but it was also setting him up to get some really significant tax savings for him. When we talk about material participation hours and the ability to use the losses against W-2 income, we typically talk about the 500-hour requirement where you as an investor earn at least 500 hours, right? But you can see for this particular client or investor, he actually didn't even need to have 500 hours because he was the one doing the majority of the work. He was able to use the 100-hour rule where he spent at least 100 hours and the other people who came and gone and helped out had fewer hours than him. So he was able to easily make the hours needed with just one rental property. He was able to get close to $80,000 in tax write-offs and depreciation, which basically wiped out a big chunk of his taxes from his W-2, saved him about $15,000 in taxes, which guess what? He plans on using as a down payment on his next rental property. When you have that question of how many rentals do I actually need to meet material participation hours, it could be as few as 1, but you do have to have the right facts, right? You know, if you just have one short-term rental that's out of state, you might not be able to get there if you're not able to do a lot of these day-to-day activities with it, but you can definitely plan strategically so that you have the right facts, because when you do, you can even get close to $80,000 in tax benefits by spending as little as 100 hours on half of a duplex. If you like this video, hit the subscribe button to get more real estate tax tips.